The fact is that there needs to be a business valuation to determine what the value is for purposes of the marital estate, because at the end of the day, it's up to the court to make some decisions about the distribution of the marital assets.
Welcome to the Herlihy Family Law Podcast, your trusted source for expert insights on navigating family law matters with clarity and care. Whether you're tackling tough decisions or seeking guidance for your family's future, we're here to help. Let's get started.
Welcome back to the Herlihy Family Law Podcast. I'm your host, Allison Herlihy, founder of Herlihy Family Law in Mobile, Alabama. On today's episode, we're diving into an important and often complex topic, business valuations in the context of divorce. Joining me is Mike Reibling, a certified public accountant and certified valuation analyst. Mike has extensive experience in helping individuals and attorneys determine the value of businesses and other assets in the divorce process. Whether you or your spouse own a business or you're simply curious about how business assets are assessed and divided, this conversation will give you some valuable insight. Let's get started. Mike, welcome. Thank you for being here.
I appreciate the invitation and look forward to this. To answer the first question, what exactly is a business valuation and why is it important? A business valuation is often going to be the primary asset in the marital estate. It may have ownership partially by either spouse, or it may be owned 100% by one spouse. But nevertheless, the fact is that there needs to be a business valuation to determine what the value is for purposes of the marital estate, because at the end of the day, it's up to the court to make some decisions about the distribution of the marital assets. And with this business being potentially the major asset, it is extremely important to have a business valuation done.
Yeah, that's true. It's really hard for the court to equitably divide all the assets when they don't know what one of the major assets is even worth.
That's very correct.
What credentials or experience should someone look for in a valuation expert?
For business valuations, we have primarily two credentials issued by organizations that focus entirely on business valuations. And one of them is the CVA, a credential that I have, and it's for certified valuation analysts. It's issued by the organization, National Association of CVAs. The other credential is called ABV. It's accredited in business valuations, and it's issued by the American Institute of CPAs. I also am a certified public accountant, so pretty much cover all the bases.
Yeah, for sure. So how is a valuation analyst different than a regular CPA?
A regular CPA is going to have their focus on preparing tax returns. They're also going to be involved in providing some consulting to clients about taxes. They're also going to be preparing financial statements for the business if the business requires it. And they'll also periodically be doing audits of businesses that might be required because of the nature of the business itself, whether it's related or relies on governmental funding, then more than likely there's going to be a required audit. So that's what CPAs do. They don't necessarily have the training to do business valuations, but they do a great job in everything else.
What are some of the common methods used to value a business?
The method that for most of the businesses that I deal with, these aren't public companies. They're not Fortune 500 companies. They're companies that, particularly in the Mobile area, most attorneys are dealing with in a divorce process. But I mainly focus on determining what the cash flow is out of the business. And this all falls under a title called income approach. And I'll talk why that differs from some other approaches. But the income approach has two different methods. One is discounted future cash flows, where we basically project out what's going to happen into the future and establish a value from that point. Obviously, we're concerned about what happened historically, and if everything is going to pretty much stay the same, expected to not change a whole lot other than inflation, then we use what we call capitalization of earnings approach. So those are the two income methods. Don't really rely on market comparables like you see in the real estate market, primarily because it's very difficult for smaller businesses, less than Fortune 500 companies, to have comparable companies out there. And so for that reason, we primarily deal with the cash flow of the business. At the end of the day, that hypothetical buyer or the judge in the courtroom, they're more concerned with how much cash that either party is going to have at the end of the day. That's why projecting cash flows is so important.
Are certain industries harder to value than others?
I thought about that question, but not really. If you're valuing a business based on what the cash flows are of the business, it really doesn't make any difference what industry it might be in. You can have situations, and I will do this periodically, where the company on its balance sheet may be so capital intensive, and that means they have a lot of money out there that they've spent on the equipment they use to produce cash flow, and therefore if the cash flow isn't up to the level of the value of the what we call the net assets, then we'll consider applying a weighting factor. Like we may value the cash flow because it's the king, but sometimes we may value that at maybe 80% and the net assets at 20%. Other than that, most of the time, it doesn't make any difference what the industry is.
So I'm imagining something, maybe say you have a construction business where somebody's got tons of like bulldozers and equipment. That's going to look different than if someone has like a solo law practice where you don't really have many physical assets, right?
That's correct. But even with all the bulldozers and everything, they're out there producing X number of dollars of cash flow. And so cash flow is still important. But like I said, we'll take a look at what the fair market value is of all that equipment.
Yeah. In your experience, how frequently do small business valuations come into play during divorce proceedings?
That's a good question, because the most of the time when I'm involved in it, it is a divorce and there is a business.
It's probably
But
almost 100% of your cases.
that's correct. You can have other things going on within a divorce that is not necessarily a business valuation. It might be as I've it might be something like I've had, and I think in the last 4 months, I've had two cases where what the owners, or not the owner's spouse, but one of the spouses has a commitment to pay alimony of a certain dollar amount, and they have now retired, and they're trying to argue that they can no longer afford to pay that alimony. A lot of times it might be professional people, doctors who may have been making $350,000 a year. Now all of a sudden they're not making that, and they have some hefty alimony payments, and legitimately they're appealing to the court to have their alimony reduced or removed. And so I went through the process of projecting out until their longevity date and seeing how everything's going to work out at the end. In those type of cases, what you're trying to do, you're trying to equalize what the two different parties might have at a certain date and time, whether it's mortality age or when it is.
Oh, that's really interesting. Because I think you typically expect that somebody who's 75 is not going to be working at the same level that they were when they were 55 or 35, right?
Sure,
Yeah.
sure.
What are some of the most important documents or financial records that you need to conduct an accurate evaluation? So, if a client and their lawyer are working together to gather documents and discovery, what are the key documents they need to get to you?
The first thing I request, and it doesn't make any difference whether it's divorce or otherwise, is the last 5 years tax returns and or financial statements. And I'll also request, if they use QuickBooks, I'll request a backup of the QuickBooks, because in preparing a business valuation, I do a lot of analytical work, and it's far easier to have that QuickBooks backup so that I can go in and select data, put it into an Excel spreadsheet, and be able to analyze the heck out of it. And so those are the items I primarily request. What I do afterwards, based on my initial review, I'll prepare questions and comments and provide it to the attorney who has engaged me, and just to get feedback and learn more about the business as I continue to develop the business value.
So, does the QuickBooks backup, does that enable you to pick and choose what information you want to see and how you want it presented versus having someone else just give you their own profit and loss statement?
That's correct. I can go in, look at all the detail, and pretty much get a lot more out of the financial data than you would just receiving a profit and loss statement or a balance sheet.
Yeah, so it allows you to run whatever reports you need to run.
That's correct.
Okay, interesting. So, how do you determine whether a business is a marital asset or a separate asset? You touched on that a little bit in the beginning with retirement, for instance.
Whether it's a marital asset or not, again, it's ultimately, let me back up a minute. In the state of Alabama, Alabama is one of those few states who has not set a precedent as to whether personal goodwill is included in the marital estate. So when we talk about that, that really becomes a decision of the judge and the facts in the case. Having said that, there are certain areas that are going to be premarital versus post marriage. I said that right.
Yeah.
But some of them, like a 401k, and I've had this situation several times where you have a person who's been working at somewhere like Chevron, and they have an excellent 401k profit sharing plan, but they were an employee and in that plan 5, 6, 8 years before they married the person they're now planning to divorce. Given that that's portion that they had when they got married can be a non-marital asset. Not only the balance that they had at that point, but also the earnings on that portion of their 401k can be determined to be a non-marital asset.
Yeah, so that's
Everything else,
something that you can do for people as well, right? Is figure out what part needs to be segregated out. Yeah.
and it's similar with a pension plan. You can have a defined benefit plan, even though we don't see those a whole lot anymore. The fact is that there are still a number of those out there, particularly for people who are older. And those things they can have premarital value. Again, similar circumstance. If the person had that pension plan several years before they got married, then you're going to have earnings related to it before and earnings related to it after they got married. And also with a defined pension plan, I do present value determination because a pension plan is going to have future payments, right? And so they may or may not have cost of living increases but in one way or the other, it's going to be a stream of future payments, and I will go in and develop what the present value is of those payments, and that becomes part of the marital asset.
And that would become especially important if, for instance, you have somebody that is still working right now while they're getting divorced and they're not going to draw the pension for 10 more years,
That's
right?
correct.
So the former spouse shouldn't get the benefit of that person's future work after the divorce. So that's why we have to figure out what's it actually worth today.
That's exactly right.
Yeah. What happens if one party is not forthcoming with the business information that's needed for the valuation?
That's never happened. No.
Everybody just turns everything over and totally cooperates, right?
Oh, yeah, it's all collaborative. Most of the time, it can be difficult to get information out of the party, but a lot of times they're pretty forthcoming, particularly the owner spouse, the majority owner spouse of the business will turn over the information. And also it depends on the attorney. Some attorneys they're a little more reluctant to do that than other attorneys. But there there are different ways and methods to go in and find out if there are assets that might be hidden, and I differentiate that from unknown. Sometimes there may be deliberate hidden assets. I've been involved in cases before over the years where it's pretty evident that one of the spouses determined 5 years before they filed for divorce that they need a plan for the divorce. And because of that, you'll find different shell corporations and what have you that you've got to go through and trace what's actually happened. But
I can think of a case I had years ago where every LLC you would find would be owned by 3 other LLCs. And then you have to find out who owns those LLC. It was like tough to unravel.
well, yeah, the cases that get the big publicity, of course, are the national where maybe billions of dollars have been embezzled. But with small businesses, you can have the same situation just on a smaller scale. But if the attorney generally has the ability to try to find other assets that might be hidden by virtue of the subpoena, they can go in and subpoena any records related to the person's social security number or anything that might be associated with the bank that they use. If they use Regions Bank, for instance, a subpoena can ask for any records associated with this particular individual, particularly either their social security number or the business tax identification number. So there are ways, and sometimes, and I've seen it where it's trading, the attorney will request all that. They'll do the subpoena, and they get no response. And what eventually happens, there are other stronger methods, and Allison can use the right terminology to help me out with that. But they can go in and basically possibly bring down the hammer from the court to make them turn over documents.
Yeah, sometimes we have situations where the third party that you're trying to subpoena doesn't respond. So the third party might be a bank or other financial institution, or sometimes we try to subpoena someone's CPA to get their records. And if they refuse to respond, we can file a motion to show cause and have them served with that, even though they're not a party. And the court will set that for a hearing and order them to appear and say, you have to turn this stuff over. Why didn't you do it? So there definitely are ways, but sometimes you have to really be aggressive and persevere with getting the information that you need because people don't always make it easy.
From my perspective, sometimes that can get overbearing. In a recent case, the local larger CPA firm who was representing both parties doing their individual tax returns, but also the business, which was owned by one party 100%, they answered the subpoena with 176 files. And from my perspective, I've got to go through and look at all 176 files and try to determine what's really applicable to this case and what isn't.
Yeah. You touched a little bit earlier on the topic of goodwill and that Alabama doesn't actually have a set precedent about that. So, assuming that whether to include goodwill or not is basically in the judge's discretion in any particular case, do you have an opinion? Do you come down on one side or the other about when it's appropriate to include that and when it's not?
I've again had several cases where that's become an issue. And to give you some examples, you have a restaurant, you have a chef who's famous locally, and everybody goes to that restaurant because that chef's there. And a lot of times these aren't big restaurants, but the question becomes, if that chef left, what's going to happen? What's going to happen to their income, to their customer base, if he's so important to the business? And you get similar situations with a dental practice where that dentist that everybody's been going to for years, they love that person, and all of a sudden that person leaves and goes somewhere else. And what happens to the value of the business?
Yeah.
I saw recently a case where the person was in the investment business and excellent job at what he was doing. But the question becomes, he was the lone wolf. He did everything. So
Yeah.
what happens if he walks outside, gets run over by an 18-wheeler, and what would be the value of the business? And
Right.
those are the questions we have to ask.
The
There is
business
one.
is that person, basically. Yeah.
Yeah, there is some. I saw a expert on the other side use it not too long ago. It's a utility called MUM, and basically it has a list of questions to determine whether there's personal goodwill or whether it's what we call enterprise goodwill. Enterprise goodwill is the value of the total business. Personal goodwill becomes the value that might be attributed to that owner who does everything. What the mum does is answer certain questions, and a lot of times it's going to still come up and tell you that this is all personal goodwill. It's not enterprise goodwill. And basically, it's up to the court to make the decision as to whether it's included in a marital estate or not.
So I guess enterprise goodwill would be like, I only shop at Publix grocery store just because it's the best.
That's
So it's
that's
not
correct.
because of who works there. Whereas if you always have gone to, say, Bob the mechanic, and he really knows how to work on your car and he charges fair prices, it doesn't really matter where Bob is. You might follow Bob wherever he goes, right?
Yeah, that's correct.
Yeah. Okay. So what are some of the most common misconceptions people might have about the value of their business?
The one of the major misconceptions is that their business is their retirement plan, and that can come up and provide a reality check, because when people have that attitude about their business, they think that, okay, when we retire, we'll be able to sell that business and it will have X number of dollars of value and we'll be able to live comfortably in retirement. A lot of times the value doesn't match what their expectation is. And so over time, they haven't taken advantage of other retirement vehicles in order to build up that retirement nest egg other than Social Security. And so for that reason, the we have to we'd like to get in sooner with those type of businesses and help them to either grow their business or do whatever. What I see with small businesses, particularly where it's, and I call them mom and pops, but they may generate $5 million in revenue, is that they work their tail ends off in the business, and they, between the two of them, they take a combined salary of $40,000 a year. When we do a business valuation, we come in and we look at the business from the perspective of, what do you have to pay people to do the same thing they did, and we call it reasonable compensation. And rather than being 40,000, it may be $140,000. So all of a sudden, when you put that extra expense in the business valuation, it obviously decreases the business value.
Yeah. So if you have one of those kind of, yeah, like you said, a mom and pop where the wife's doing the books and scheduling the appointments and the man's going out and doing estimates and repairs or whatever kind of stuff they're doing. If you had to actually hire two people to do that work, you'd have to pay them a lot more money.
Exactly.
What are some red flags you can say that would suggest that a business owner might be trying to undervalue their company?
Couple red flags. Number one, and we talked about these possible other related companies out there. Whenever I see management fees as an expense for the business, I want to pretty much track that through, because that's an opportunity to basically deflate the value of the business by paying management fee to another entity that's probably owned by the same business owner. And so you've got to track that through. Had a case this probably 5 years ago where the guy came in, divorce situation, and he came in, he had a lucrative business, but he set up this other company, and he started paying management fees to it of, I don't know, $400,000 a year, which had a very detrimental effect on the business value, except for the fact that I ignored it. It's facts and circumstances whenever you see something like that. Another thing that we'd look for is if the property is owned outside of the business, like the building they're in, and they're paying rent for that property. Sometimes the rent can be exorbitant because it's separately owned in that other business. So we do take a look at that. We'll go in and compare the per square foot rent that's being paid by the business versus what might be the trend within that particular area.
Yeah, like what the reasonable market value is.
Exactly.
Yeah.
Well,
Sorry to interrupt. I would think another thing you'd want to look out for would be if you see a lot of loans flowing between the owner and the business and it's unclear kind of what those are for.
yeah, I agree. And we do look at that, but we also we'll look at the bank accounts to, particularly if there are a lot of transfers out of the business bank account. It tells us several things. Number one, that there are amounts coming out of the business that are going somewhere else, and it tells us where they're going to. In some cases, you might have investments out there where the owner is taking a lot of money out of the business and putting it into this outside investment like Charles Schwab or what have you. And it's growing out there, and it should be a marital asset, but it may be known or unknown until we go through that process and find that there's money going to that particular fund. So there are several ways of, call them red flags or whatever, that we will go in and analyze it and try to determine where that money is going and how applicable it is to the business. I also have situations where the spouse on the other side is pretty diligent about trying to find stuff that the other spouse may have spent through the business, even within their credit card details. And they will submit to their attorney a lot of those different items for basically further investigation as to whether they're really business expenses or not.
Yeah. And that can become really important when you're looking at what child support and alimony is supposed to be. Like if someone says, oh, I only pay myself a salary of $40,000 a year, but then they're paying all these personal expenses out of the business, that's really their income too.
Yeah. Like I said, the other spouse is pretty diligent. Sometimes you'll find that apartment that's being paid for, and there's question as to why that's happening.
Those are good questions. So, what are some of the most challenging aspects doing this kind of work in a divorce context?
Some of the most challenging are related to getting, of course, documents, getting QuickBooks backup. Some attorneys representing the other party are reluctant to give up QuickBooks data. They'd rather just give you the printed reports and not give you anything behind it, the background. And that gets very frustrating because it makes my job more difficult. It makes the attorney's job more difficult. So that's a challenge. Also, getting involved late, and I think we address it in another question also, but getting involved in the case late in the case. Sometimes the process of getting a business valuation is secondary to everything else that's going on, like custody battles and other issues, child support. So there's a lot of other things that are going on, and sometimes the attorney just procrastinates or whatever and doesn't realize that they need to get somebody like me involved early.
Yeah, that's a great tip to think to get a business valuator involved earlier in the process.
We also, yeah, we run into situations too where generally I don't want to know the background story. But sometimes you'll get, particularly if you're meeting with one party or the other, one of the spouses, they will sometimes unload on you
Yeah,
and tell you
it's a
all the
very
drama.
emotional process.
They'll tell you all the trauma in the
Yeah,
background. I've had people, male and female, crying, and because it's such an emotional situation, and it is. I've I've sat in the courtroom in Mobile in the hallway outside of divorce court, and the chairs are filled with people, and one party, generally along with the kids, are on one side of the hallway there, the others on the other, and it's really emotional to
yeah,
see the kids going back and forth between the two parties, realizing what the situation is. But like I said, I try not to get involved in the trauma, and the background stories.
yeah. Processing the emotions really isn't your purview, right? It's the numbers and the facts.
I've said before that we should be, we have to have some tendency toward being social psychologists just in dealing with some of the clients.
What advice would you give to a business owner who's going through a divorce?
Be honest, provide anything and everything that the parties request, the court requests, the attorneys request, because the worst thing that can happen is getting into court and there'll be a trial, particularly regarding the value of the business, and doing that cross examination of that owner. All of a sudden, those smoking guns come out that basically are saying that he's provided inaccuracies to the court, and judges don't really like that, and
Yeah,
therefore you have the situation that's may or may not affect what the ultimate decisions are in the case. But the fact of the matter is, you want to be honest and you want to provide everything. You never have to run into that situation.
yeah. I tell clients all the time that most of the time, getting caught in a lie is going to be worse for your case than whatever it is you're lying about.
Yeah.
Yeah, honesty is always the best policy for sure. Mike, thank you so much for joining us today and sharing your expertise and your insights on business valuations. I know this is a topic that comes up often in family law cases, and your perspective is really helpful. Where can people find you if they want to consult with you about a business valuation?
I can provide an email.
Okay.
I've actually had an office in home since 2004. I was a partner with Lawrence and Lawrence, a big CPA firm here in town, for about 12 years, but everything I was doing on my own. So I decided to bring it home. And for years, I had two administrative assistants Both of them were Yorkies, and they were very attentive to my needs and made sure I got up periodically. But
That's good. I know where to find you if people need to find you.
okay.
Thanks again for everybody that's listening. If you enjoyed this episode, please leave us a review or share it with someone who might find it helpful. And we'll be back soon with more insights from the world of family law. Thanks again, Mike.
All righty. Thank you, Allison.
Yeah.
Thank you for tuning in to the Herlihy Family Law Podcast. Remember, you don't have to face family law challenges alone. Visit HurleyFamilyLaw.com or call 251-432-7909 to learn more.